Assalamualaikum warahmatullahi wabarakatuh, and hi everyone. So today me and my group going to present about our group project 1 question. So in this group project we have 4 questions that will be present, and also we have a Q&A session at the end of the presentation that consists of 2 questions. Before we start, I will introduce myself and my group member. First of all, my name is AHMAD AFIZIE bin ZAWAWI, and we have RIDAUDDIN bin ROSEZAIDEE. Next we have Luqman Hakim bin AGUS PURWANTO, and lastly we have Muhammad NAJWAN bin ROSLAN. For the question 1A, we have been asked to find the goodwill or bargain purchase in acquisition in Bid Berhad, Asal Berhad, and Good Berhad. But before we proceed to that, we must know what are the acquisition percentage for each subsidiary. For the acquisition in Bid Berhad, Great Berhad have acquired directly 75% ordinary share capital in Bid Berhad at the date of 1 January 2018, and the non-controlling interest for Bid Berhad is 25%. In Asal Berhad, Great have acquired 60% ordinary share capital and 30% debenture on 1 January 2020, and the NCI is 40%. However, in 1 January 2021, Great Berhad has acquired another 20% ordinary share capital in Asal. So the holding in Asal have become to 80%, and the NCI is 20% in 1st January 2021. In January 2021 also, Bid Berhad acquired 80% in Good Berhad. From this, Great Berhad will indirectly acquire the Good Berhad by 60%, and the NCI will become 40%. This is because Great hold Bid Berhad 75% and Bid hold on Good Berhad at 80%. When we calculate the effective interest by multiply the 75% with the 80%, and we got 60% indirect hold in Good Berhad. And the last thing is the financial year end is 31st December 2021. So now we start with question 1A, which is find the goodwill or bargain purchase on the acquisition of Bid Berhad. First, the consideration transfer is by cash, and the amount is 960 million. Next, we have to find the fair value of net asset at the acquisition date, because in the question, the goodwill will be calculated by the partially goodwill. In fair value of net asset, we have ordinary share capital of 1050 million, return profit of 100 million, and asset revaluation reserve of 108 million. So the total of fair value of net asset is 1,258 million. 25% from the fair value of net asset is the amount of non-controlling interest, and we get 340.50 million. So we add 660 million with the 340.50 million, and minus with fair value net asset of which is 1,258 million, and the amount of goodwill is 16.50 million. But in the question, there are impairment goodwill for investment in Bid Berhad that impair at 10% of goodwill. So we get the impairment goodwill amount of 1.65 million, and this amount will be minus with 16.50 million. So the goodwill after impairment is 40.85 million and will be transferred to CSOFP, and also with the impairment goodwill will go to the CSOPL. Continue with question 1A, the goodwill or bargain purchase on the acquisition of Asal Berhad. The policy in Great Berhad is to calculate the goodwill by partially goodwill. So first is the consideration transfer in the Asal consideration transfer for acquisition in Asal Berhad. For the consideration transfer for acquisition in Asal Berhad is in cash, which is 322.50 million. To find a non-controlling interest value, we have to find the fair value on the net asset first. So in fair value of the net asset, we have ordinary share capital of 300 million, return profit of 117 million, asset revaluation reserve of 72 million, and on the acquisition we have asset revaluation reserve on land for 3 million. So the total of fair value of the net asset is 492 million. So the non-controlling interest value is 40% from 492 million is 196.80 million. So the goodwill for Excel is cash transfer 322.50 million plus with non-controlling interest 196.80 million and minus with the fair value on net asset of 492 million, and we get the goodwill of Excel Berhad. We get the goodwill on Excel Berhad is 27.30 million, and this goodwill will be transferred also to CSOFP.
For the Good Berhad, there is indirect non-controlling interest because Great Berhad does not directly acquire Good Berhad. Thus, there would be an effective interest of 60%. The amount of goodwill acquisition of 29.82 million will be recorded in consolidated statement of financial position. The direct non-controlling interest of 205.12 million will be recorded in statement of changes in equity as acquisition. Since Great Berhad acquired another 20% of ordinary share of Excel, we need to compute the gain or losses arising from the second acquisition of shares in Excel Berhad. Based on the computation, we got gain of RM31.68 million and recorded into statement of changes in equity as changes in shareholding. So for working to carrying amount of investment in associate, we calculate the impairment by take the 20% from interest in associates, which was 25% from post-return profit. Therefore, we got the carrying amount of investment which valued 46.97 million after the cost of investment less by the impairment.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad NAJWAN bin ROSLAN. I will explain on the consolidation statement of profit or loss. There are several adjustments in this financial statement. The first item is revenue. Firstly, we must total up the revenue of parent and the subsidiaries, and then we minus the intercompany sales, which are 60 million and 30 million. So we will get the total revenue of 666 million. The second item is cost of sales. Firstly, we must total up the cost of sales of parent and the subsidiaries, and then we minus the intercompany sales, 60 million and 30 million, and add up the unrealized profit 5 million and 2.5 million. So we will get the total cost of sales of 355.5 million. Then gain on disposal of property, plant and equipment. First, we total up the gain on disposal of PPE of parent and the subsidiaries, and then we minus the intercompany disposal of assets, 4.5 million and 12 million. So we will get the total gain on disposal of PPE amounting 4.5 million. Next, investment income. First, total up the investment income of parent and the subsidiary, and then we minus the interest of debentures, 3.6 million. Then we will get the total investment income of 47.4 million. And then expenses, we just total up the parent and the subsidiaries, and we will get 126 million. Share profit of associate from the calculation earlier, 1.97 million. Over depreciation of machine, 12 million divided by 4 years. So we get the amount of 3 million. And then other income, we add up the dividends from subsidiaries, 11.7 million, 12 million, and 4.8 million. And then we minus back 28.5 million, so the balance will be nil. Okay, for the impairment of goodwill from the calculation earlier, 1.65 million. Then we get the profit before taxation, 239.72 million, and then we minus the taxation of 63.6 million, and we get the profit after taxation of 176.12 million. Then other comprehensive income, there is an increase in revaluation of 24.7 million, and we will get the total other comprehensive income of 282 million. For the profit after tax attributable to parent and NCI, first we must calculate for the non-controlling interest first. I will explain the calculation on the next slide. So I already get the amount for NCI of 43.77 million, and we minus with the profit after tax, then we get the amount for parent amounting 132.35 million. Lastly, total comprehensive income attributable to parent and non-controlling interest. First, we must calculate the amount for NCI. For 43.77 million will be added up with the proportion for the asset revaluation reserve of 0.7 million, and then we get the NCI of 44.05 million. Then we minus with the total comprehensive income, then we get the amount for parent amounting 156.77 million. Okay, this is the working for profit after tax attributable to non-controlling interest. Okay, first we will look at the column of Big Berhad. There are profit for the year amounting 54.6 million, and then we will minus the preference dividend of 14.4 million, and then we will get 40.2 million, and then we times with the non-controlling interest of ordinary shares capital of 25%, and then we will get 10.05 million, and then we will add with the non-controlling interest preference shares amounting 14.40 million, and then we will get the total of 24.45 million. Okay, next we will look at the column of Excel Berhad. The profit for the year is 45.6 million. Will minus the unrealized profit of motor vehicle 4.5 million, and then we add the over depreciation of motor vehicle amounting 0.9 million. We will get the total of 42 million, and then we will times the non-controlling interest of ordinary shares 20%, and then we will get 8.4 million. Next, Good Berhad. The profit for the year is 27.3 million, and then we will times the non-controlling interest of ordinary shares 40%, and we will get 10.92 million. So we will add all the three columns, and then we will get the total attributable to non-controlling interest amounting 43.77 million. Okay, so this is working to calculate the balance BD. Okay, for the first column of GRR, there are no adjustments since the two subsidiaries have zero balance of asset revaluation reserve. So we will only take the asset revaluation reserve of Great Berhad amounting 510 million. Okay, next for the second column for GRP, since there is retained profit balance in Big Berhad of 82.4 million, we will apportion 75% to the column of GRP amounting 61.8 million. Next, there is retained profit balance in Excel Berhad of 2.4 million. We will apportion 60% to the column of GRP amounting 1.44 million. Then we will add up with the retained profit of Great Berhad amounting to 539.10 million, and we will get the balance BD of 602.34 million. And the last column, which is non-controlling interest, first we will add the non-controlling interest in Big Berhad 314.5 million, and the non-controlling interest in XL Berhad 196.8 million. Then add with the preference share in Big Berhad 240 million. Then minus the NCI, which is indirect in Good Berhad, amounting 45 million. Next, we add the return profit apportion from the two subsidiaries for NCI, 20.6 million and 0.96 million. And we will get the balance BD of 727.86.
Next, I will continue to explain on consolidated statement of changes in equity for Great Berhad Group. After make a calculation on the balance brought down to the non-controlling interest, the amount for group return profit is 602.34 million. For non-controlling interest is 727.86 million, and for group revaluation reserve is 510 million. So first, we will look at the column of group return profit. The balance brought down will be added with profit after tax of 132.35 million that we obtain from SOPL, add with changes in shareholding of 31.68 million that we get from the working of gain or loss from second acquisition. Then less dividend of ordinary share capital 42 million, where I already include the calculation how we get that amount, and also less dividend of preference share capital of 18 million. Finally, the balance brought down for group return profit is 706.37 million. For non-controlling interest, the balance brought down of 727.86 million will be added with profit after tax of 43.77 million from SOPL, and since there is an acquisition during the year of 70.17 million, the amount also should be added. After that, there is a revaluation during the year, amounted 0.7 million, but that amount should be apportioned to non-controlling interest with the amount of 0.28 million. Then less with 98.88 million of changes in shareholding, and together with dividend of ordinary share capital 8.1 million, and also dividend of preference share capital 14.4 million. All the calculation is shown in the table. Finally, we get the balance of carried down of 720.65 million for non-controlling interest. Lastly, we will look at the column of group revaluation reserve. Since there not much transaction for the revaluation reserve, the balance brought down only have to be added with revaluation reserve during the year amounted 0.2 million, where we get that amount from the calculation shown in the table. So the balance carried down is 510.42 million. So next, I will explain on the workings of ordinary share capital dividend paid to the non-controlling interest. First, since Great Berhad acquired 75% ordinary share in Big Berhad, so the non-controlling interest percentage is 25%. That percentage will be times with 15.6 million, where we get after deducting the dividend paid of ordinary share capital and preference share capital in Big Berhad. Thus, we get a total of 3.9 million. Next, the non-controlling interest percentage for XL Berhad is 20%, and multiply that percentage with 15 million. The total that we get is 3 million. Lastly, the non-controlling interest percentage for Good Berhad, which is 20%, multiplied with 6 million to get total of 1.2 million. After sum up all the amount, the ordinary share capital dividend paid to non-controlling interest is 8.1 million, where it will be included in the statement of changes in equity. So next, I will continue to explain on consolidated statement of financial position of Great Berhad Group. So first is non-current asset, and the first item is property, plant and equipment. So first, we just add the amount of parent company and its subsidiaries, then plus with 1.6 million, which is ARR from Group Berhad, and plus with 3 million ARR from XL Berhad, and plus 0.7 also ARR from Good Berhad, and then plus with 3 million and 0.9 million, which is over depreciation of machine and motor vehicle, and then minus 12 million and 4.5 million, which is the disposal of an asset. So we get a total of 4395.8. Next is investment in associates, which is Small Berhad. We get the amount of 46.97. that we get from the calculation of associate. Next is other investment. We just add the amount of parent company and its subsidiaries. We get amount of 525 million. Intangible, as usual, we just add amount of parent company and its subsidiaries. We got 333 million. And goodwill, we add the amount of goodwill that we get in the calculation. So amount we get is 71.97 million. And next is current asset. The first item is bank. We just add all the parent company amount and its subsidiaries and get 444 million. Receivables, we add parent and its subsidiaries amount, then minus 60 because of transaction between parent company and Big Berhad, and minus 16.2 and 13.8 because of transaction between parent company and XL Berhad. So we get amount of 390 million. For inventory, we just add parent and subsidiaries amount and minus with 5 and 2.5 million because there is an unrealized profit on inventory. So we get 310.5 million. And there is a cash in transit between transaction of Great Berhad and XL Berhad, which is 16.2. And then we will get the first balancing figure, which is 6533.44. The next is equity. Ordinary share capital, 2,400, we add with 67.2 because the parent company acquired another ordinary share. So the amount is 2467.2. And 6% preference share, 300, we get from the amount of preference share of parent company. Group return profit, group revaluation reserve, and non-controlling interest, we get that amount from the statement of changes in equity. Next is non-current liabilities, add percents debentures. We just add parent amount and subsidiaries amount and minus with 45 million because parent company acquired debentures of 45 million. So we get amount of 855 million. Lastly is current liabilities. Payables, we just add parent and subsidiaries amount minus with 60 and 13.8 million, same just like our receivables, and get amount of 709.2. And lastly, we include accruals, which is just add the parent amount and subsidiaries amount and get 264.6 million. So we get the same balancing figure, which is 6533.44. So next, I will continue to explain on question 2. As a group accountant, my opinion is the financial statement of FNE Berhad should be consolidated with Nal Berhad and Sinji Berhad. It is because Nal Berhad and Sinji Berhad acquired 50% of shares in FNE Berhad, where it meets the percentage for the subsidiaries, which is 50 or more than 50%. According to MFRS 10, it stated that the consolidation is done between the financial statement of a parent and its subsidiaries only. Since FNE Berhad is a subsidiary to Nal Berhad and Sinji Berhad, thus they can include FNE Berhad in their consolidated financial statement. Other than that, as a parent company, automatically they will have a power and control over their subsidiaries. So in this case, since Nal Berhad and Sinji Berhad is a parent company for FNE Berhad, they actually have a power to appoint a senior management team member in order to make key decisions on an important project of the company and how the project is financed. Nal Berhad and Sinji Berhad basically have a power to appoint, reassign or remove key management personnel who direct the relevant activities and make important decisions for FNE Berhad. So that is the relationship or rights of Nal Berhad and Sinji Berhad as a parent company towards their subsidiary, which is FNE Berhad. Next, I will explain about the relationship between Nal Berhad and Sinji Berhad. With the reference to MFRS 11, Nal Berhad and Sinji Berhad is not a party to a joint arrangement. It is because the question stated that there is no contractual arrangement between Nal Berhad and Sinji Berhad. In order to create a joint arrangement, there must be an existence of contractual arrangement where it will provide the joint parties a joint control on the arrangement. When there is no contractual arrangement, there is no share of control that will happen between Nal Berhad and Sinji Berhad, where they will not have any power to consult each other or to make a collective decision. Only with the existence of the contractual arrangement will allow them to do so. For the joint arrangement, there are two types of the arrangement, which is known as joint venture and joint operation. According to MFRS 11, joint venture is where the parties to the arrangement have the right to the assets and obligations for the liabilities relating to the arrangement. For joint operation, it is where the parties to the arrangement will have the rights to the net asset. Referring to the question, since there is no contractual arrangement between Nal Berhad and Sinji Berhad, so they will be not classified either as joint venture or joint operation. I think that's all from me, and I will pass the presentation to the next presenter.
Okay, for question 3, I will discuss on the accounting treatment of Kendall Berhad's acquisition on 1st January 2018. Before I proceed to the accounting treatment, I will explain on the adjustments made. The first one is, since Hendrik Berhad acquired 80% ordinary shares of Kendall Berhad, so it is equal to 12 million units of ordinary shares. The second one is goodwill. The considerations transferred is using shares exchange amounting 27 million. The non-controlling interest, since it is measured at the fair value of net asset at the date of acquisition, so we will get the amount of NCI of 4.5 million. Then we will minus the fair value of net assets of subsidiary amounting 26 million. We will get the goodwill of 5.5 million. Okay, for the accounting treatment, Hendrik Berhad, which acquired 80% of ordinary shares, which equal to 12 million units issued by Kendall Berhad, has a control over Kendall Berhad as it has power over the investee, exposure or rights to variable return from its involvement with the investee, and the ability to use its power over the investee to affect the amount of the investor's return. This has caused parent and subsidiary relationship to exist between these two companies. This is due to shares acquired by Hendrik Berhad of 80%, which is more than 50%, causing Hendrik Berhad to have control over the entity. Investment acquired comprises the value of shares acquired plus a proportionate amount of reserve, which is retained profit and general reserve, of the subsidiary existing on the date the shares were acquired. In this case, the consideration transfer of 27 million cannot be fully eliminated against the acquisition date equity, being subsidiary share capital and acquisition date reserve. The difference of 5.5 million is goodwill on consolidation, which will be recognized and disclosed in the statement of consolidation of financial position. Furthermore, Hendrik Berhad has acquired 12 million units of the issued 15 million units ordinary shares of Kendall Berhad, thereby gaining 80% control. Thus, the non-controlling interest amounts to 20%. Non-controlling interest is measured at fair value of net asset at the date of acquisition. Hence, the value of non-controlling interest on 1st January 2018 was 4.5 million.
For question 3b, this is the calculation to find gain or loss on the disposal for Hendrik Berhad. First, the consideration transfer. Since Hendrik Berhad disposed 68%, the consideration transfer is 26 million as stated in the question. Then add with the fair value of remaining shares amounting 10 million. Then we find the fair value of net assets of subsidiary. As stated in the equations, the balance as at 1 January 2021 is 35 million. Then we minus with the loss of the year, which is 8 million times 6 months over 12 months, and we get 4 million. We must apportion with 6 months because the disposal occurs on 30 June 2021, which is half of the year. After that, the fair value of net assets amounting 31 million with times with 80%, and we get 24.8 million. Next, we minus 36 million and we will get 11.2 million. Then the value will be minus with the remaining goodwill 5.5 million, Finally, we will get the gain on disposal of 5.7 million. So for question 3C, discuss the effects of implementing the plan on the group's financial statements as at 31 December 2021. So for consolidated statement of profit or loss, Hendrik Berhad shall consolidate Kendall Berhad until the date of disposal, which is on 30 June 2021, as Kendall Berhad was still a subsidiary to Hendrik Berhad. After the disposal date until the end of the accounting period, which is on 31 December 2021, Hendrik Berhad shall recognize gain on disposal of subsidiary amounting RM5.7 million. So for consolidated statement of changes in equity, non-controlling interest balance will become nil. Add item disposing during the year in the non-controlling interest column amounting RM6.2 million. Consolidated statement of financial position, Hendrik Berhad shall no longer consolidate Kendall Berhad as at year ended 31 December 2021. Hendrik Berhad shall recognize its investment in simple amounting RM10 million as non-current asset.
I will continue with the last question in group project 1, which is question 4. The question asks us to explain the relationship between Platinum Berhad and Sandy Berhad with the reference to MFRS 128, investment in associate and joint ventures. So in MFRS 128, we find that associate is an entity over which the investor has significant influence. The investor has significant influence over the investee if they holds directly or indirectly 20% or more of the voting power in investee. So Platinum Berhad has significant influence over the Sandy Berhad by hold directly 25% voting power in Sandy Berhad because Platinum acquire 26,000 ordinary share capital out of 104,000 in Sandy Berhad. So the relationship between Platinum Berhad and Sandy Berhad based on MFRS 128 is an associates relationship investment. Moreover, significant influence can be same as an evident by participation in the financial and operating policy decision of the investee, but not control of those policy. Platinum Berhad had the right to participate in the policy making process and interchange of managerial personnel of Sandy Berhad. So Platinum have exercised the significant influence in Sandy Berhad.
Okay, for the Q&A session, the first question is, Great Berhad acquired 60% of the ordinary share capital in Big Berhad. In 1st January 2021, Big Berhad, XL Berhad and Small Berhad entered into a joint arrangement and incorporated Best Berhad to operate the arrangement. A contractual agreement between Big Berhad, XL Berhad and Small Berhad enabled them to jointly control Best Berhad, and decision about relevant business activities of Best Berhad should have the unanimous consent of all the companies sharing the control. Discuss whether Great Berhad has joint control over Best Berhad. Okay, the answer for question 1 is, with reference to MFRS 11, Great Berhad has no joint control over Best Berhad since there is no contractual agreement between Great Berhad, Big Berhad, XL Berhad and Small Berhad that can provide Great Berhad has a joint control over Best Berhad even though Great Berhad is a parent to Big Berhad. All decisions about relevant business activities of Best Berhad should have the unanimous consent of all the parties. Therefore, Great Berhad has no joint control over Best Berhad.
For the question in Q&A session is, for the second question in Q&A session is, why do we need to apportion the NCI and group return profit or group asset revaluation reserve of its subsidiary return profit. For the answer to the question 2 is because parent company of the subsidiary only acquire partially ordinary share capital of their subsidiary. So because of that, the subsidiary return profit need to be apportioned into parent, which is in group return profit, and another portion will be transferred into non-controlling interest. For example, if the parent company acquire 80% ordinary share capital of their subsidiary, so they only can apportion 80% of their subsidiary return profit into group return profit, and another 20% of the return profit of their subsidiary will be transferred to non-controlling interest. In other hand, if the parent acquire 100% of the subsidiary ordinary share capital, return profit for the subsidiary 100% will be transferred to group return profit. So that's all from our group presentation. Thank you for watching, and Assalamualaikum warahmatullahi wabarakatuh.